What's up guys, how you doing, and welcome back to my channel. Buckle up, because today we're gonna discover the world of indices, in particular the dollar index. So make sure you watch this video to the end so you get the most of it. And not only that, I'm gonna be opening some binary options trades, so make sure you watch this video to the end so you get the most of it. And as always, if you would have any questions, you can ask me on Telegram. You'll find the link to my Telegram in the description below this video. And also the link to my private Telegram channel where I share daily trading signals and I also run weekly marathons to increase your balance from $150 and up to $5,000 in a week time. So make sure you check these links below. And to sign up for PocketOption and to get 50% bonus on your deposit, make sure to text me today on Telegram to get the registration link. And without further ado, let us get straight to trading. Today I'll be trading on the currency pair, the euro and the Canadian dollar. And as always, using my three indicators, the Donchian channel, Williams R%, and the Arun indicator. And the settings of the indicators are set to standard. Okay, the price fell, made a rebound, so I'm gonna make an up trade for $300 for 1 minute. And my decision was also supported by the signal from the Williams indicator, as its line deviated up quite strongly, which indicated a possible price increase. And that's why I made an up trade. So let's see how our trade is going to close. Meanwhile, let's start our topic of today. So indices are tools that allow you to get a complete picture of the state of not just a certain asset, but also an entire industry, a country, and even a group of countries. Imagine that an index is like a moving average for a group of assets. And of course, one of the most important ones is the dollar index. And there are super popular indices for working with stocks in the US, such as the Dow Jones Industrial Average, NASDAQ, the Russell 2000, S&P 500, and Wilshire 5000. And let's take a break and take a look at our trade. It's closing right now, okay? And our trade was a profit added to my account, $276. So if there are so many indices for stocks, isn't it possible to come up with a similar one for the dollar? Actually, it was already created, and it's called the US dollar index, and you can see it abbreviated as DXY. So the index includes a basket of foreign currencies which values compared with the dollar, and the concept is very simple. So we have shares of many industrial enterprises. Well, how long would it take for you to evaluate each one to get the general picture of the state of the industry? This was already done for you. The Dow Jones Industrial Average is at your service. And do you want to know how the dollar is evaluated against key world currencies? The US dollar index will help you with that. And I made a down trade for $300 for 1 minute. And here the situation is reversed. Despite a certain price increase, the Williams line occupied a horizontal position, which indicates a possible decline in price in the future. And back to our topic, the dollar index includes the following 6 currencies: the euro, the Japanese yen, the British pound, the Canadian dollar, the Swedish krona, and the Swiss franc. But the number of countries included in the index is more than that. So after all, the euro is used as the national currency in as many as 20 European countries. And we have 5 more countries: Japan, the UK, Canada, Sweden, and Switzerland. And this is a big part of the world, and as a result, the dollar index can be considered as an excellent tool showing the global value of the dollar. And our trickles of profit added to my account, again, $276. So the countries in the index are not equal in their economic opportunities. Therefore, each of them is allocating only its own share in the index. Given that the euro is 20 countries, then the euro have the biggest share. Then we have Japan, because Japan is one of the largest economies on the planet. Now the question is, what will happen to the index if the euro falls? Given the share of the euro in the index, it can be considered an anti-euro index. So keep that first point in mind. The index is calculated like currencies, 24 hours a day, 5 days a week, and the calculation is carried out on a relative scale with the initial level of 100. Assume the current index value is 97, this means that the dollar has fallen by 3%. Alright, so keep that in mind. And I made an up trade for $300 for 1 minute. And the price is rising again, but more importantly in this case, the Williams line is also growing, giving a signal of a possible continuation of the upward movement. And let's observe our trade and continue with our topic. And let's say, for example, the index value was 120. then the dollar has grown by 20% since the index was launched. And actually it was launched in March 1973. So also that's one good information for you. Then the presidents of all the leading countries gathered in Washington and agreed that their currency should be freely converted into each other. But the dollar index is not the only one. We have the trade-weighted US dollar index, okay, was created to more accurately reflect the value of the dollar in relation to other currencies, taking into account the competitiveness of the American goods and services. And our trade is closing right now. Almost there. And our trickles of profit added to my account, again, $276. Amazing, we keep going. So let's continue our topic, and the trade-weighted index is quite recent. It appeared in 1998, and there are a lot more countries in it than in the previous one. So the main difference between the two dollar indices is that their basket includes a different number of currencies. A lot more currencies are represented in the trade-weighted index. And not all of them are industrial and financial leaders. There are many developing ones as well. So therefore, this index is more a global reflection of the value of the dollar against world currencies than the dollar index. So that's the main difference. Let's continue our topic, and the price movement has almost stopped, but the Williams line is growing. So I'm gonna open an up trade for $300 for 1 minute. And there is nothing more to add here, so I'm gonna continue our topic. Now, let's look at how to use the dollar index in your trading. Of course, the main interest to the dollar will arise, to the dollar index will arise when you work with the currencies that includes it. We have the euro, US dollar, the British pound and the US dollar and the Japanese yen, the US dollar and the Swiss franc, and the US dollar and the Canadian dollar. So these are the cases where you will need the dollar index. So basically saying all that the index gives us is a general idea of the strength or weakness of the dollar. Since it can be regarded as a universal indicator, do not forget that the share of the euro in this index is more than 50%. So the euro US dollar currency pair is the main asset here. If you need to assess the state of the dollar in all dollar pairs, the index is best suited for this. And our trickles of profit added to my account, $276. So if the dollar index showed increased volatility, it will be reflected in other currencies of the index. A breakdown of the support and resistance level on one chart corresponds to a similar breakdown on others. If the dollar is the base currency, the first currency in the pair, then the dollar index and the currency pair will go in the same direction. If the dollar is a quoted currency, the second in the pair, then the index and the currency chart will go in different direction. And I made a down trade for $300 for 1 minute. And I made this decision because the price was near the last support level, which, as I said earlier, may become a resistance level, and we will not interrupt an interesting conversation, and we will continue with our index. So the dollar is a very interesting currency because it can become stronger in both bad and good economic conditions. As a result, one of the Morgan Stanley employees somehow came up with a fundamental theory that allows us to explain this phenomenon. It was Stephen Jen, an economist and a currency analyst. He developed the theory of the dollar smile. It implies that the US dollar, in all its diversity, always adheres to only 3 scenarios. About them in a second. Our trade is closing. Alright, we got a refund. Alright, let's continue, guys. First scenario is risk avoidance. This is a situation where investors are looking for a safe haven for their funds that are stored somewhere. Since they believe that the global economy is slowing down, they are in no hurry to acquire risky assets and prefer to invest in less risky dollar assets, even if the US economy is not showing particular success. Alright, I'm gonna make a down trade right now for $300 for 1 minute. My expectations haven't changed, so I'm not stopping. The second scenario, the dollar is falling. The dollar is also falling strongly, updating the minimum values. This is the lower part of the smile, indicating that the US economy is weak, as well as the national currency is weak as well. In this scenario, the discount rates are often reduced, which can also affect the disappreciation of the dollar. As a result, the market gets rid of the dollar and the smile becomes wider. So that's the second scenario. The third scenario is everything comes back, the dollar is loved and respected again thanks to economic growth in the US. When investors see the light in the end of the tunnel, there is more and more optimism. Traders are starting to buy the dollar asset and there is an increase in the US GDP. And the expectations of an increase in key rates are also increasing. And our take-home profit added to my account $276, and this is the end of our today's trading session. The US dollar index is a macroeconomic indicator, and it's used to study the global state of the US dollar on the older time frames. It is used in addition to fundamental analysis or to search for discrepancies between the index and the euro-US dollar currency pair in one-day time frame and above. By studying inflation and the US economic indicators, the index will add another variable to the equation and will provide an opportunity to assess the global prospects of the US dollar. That's why it's a frequent guest on the screens of all professional traders and currency analysts. As for our today's session, we made 5 successful trades and I managed to make $1,380. So I hope this information was useful to you guys and will help you make money on binary options. After all, only practice will teach you how to understand the market better. Remember, if you don't have any questions, I highly advise you to use technical indicators because it will reduce your risks and help you make money over the long run. And I keep advising you to use indicators that you understand their signals. And anyways, technical analysis on binary options is not complicated at all. And if you would have any questions, you can ask me on Telegram. I'll leave the link to my Telegram in the description below this video. And also the link to my private Telegram channel where I share daily trading signals and I also run weekly marathons to increase your balance from $150 and up to $5,000 in a week time. Make sure to check these links below and to sign up for PocketOption and get 50% bonus on your deposit. Make sure to text me today on Telegram to get the registration link. And if you like this video, please consider giving it a like, leave your comments down below, subscribe to my channel, turn on the notification bell so you get notified when I drop a new video. That's been it for today, and I'll catch you guys in the next one.